FY26 is expected to slow to 6.7% on the back of weakness in demand and tariff-related concerns. My colleague Varun Dubey is joining with more details on what to expect from Q1 numbers of GDP this time.
Well, so the GDP numbers for the first quarter of FY26 is expected to come at around 6.7% and the range is around 6.4 to 7.1%, and this is Bloomberg estimate, and it would be better than the MPC estimates of around 6.5%. Now, it is the service sector which will actually aid to the overall GDP, where the performance is expected to be better, although the industrial and agriculture sector is expected to be a little bit drag on the overall GDP numbers. If you look within consumption, it is the rural consumption which was actually resilient, led by the rising real wages, and the urban is actually muted, which will actually weigh on the overall GDP numbers as well. Also, if you look, the overall net indirect taxes that is expected to grow in double digits, which will actually help the overall GDP numbers. The GVA is expected will actually be near about 30 basis points in the Q1 of FY26. So if you look 6.7%, it is the Bloomberg estimate, and the overall GDP numbers for Q1 of FY26 will actually be led by the government CAPEX and rural demand. But for the second half, it would be urban demand which will actually help the overall GDP numbers, and also the GST rejig that would help the overall GDP numbers in the second half of FY26. So this time it is 6.7%, which is the Bloomberg estimate for GDP of India.
IIP growth came in at 4-month high of 3.5%, helped by increased output in manufacturing sector, which grew at highest pace in the last 6 months. Meanwhile, mining sector output fell to minus 7.2% versus 3.8% last year. Let's hear what Aditi Nair from ICRA had to say about it.
Within manufacturing.
If you like this video, then like, share and subscribe to ET Now.